Go.
Hello, hello, hello. Thanks again for tuning in to another awesome episode of Building Legacies. Yes, I said Building Legacies, BLDNG, Building Legacies. And I'm here today with my two awesome, like I said, awesome co hosts, Stan and Eric. Please say hello to the audience.
Thank you,
Yeah.
thank you, thank you for tuning in.
And, Eric, I'm
Mhm.
missing that Yankees hat. I was loving it in the last episode. What happened?
I'm breaking back because sometimes too, that's like my superpower. When I put that on, I get in a different zone. So it'll be back soon.
Okay, yeah, I was loving that. I was loving that. And
Right.
so, guys, I am super excited about today's episode because we actually have a guest.
Yeah.
We have a guest.
We getting up there. We getting up there. We starting the road to big time.
Right.
Yes. And so we're here today with Tasha Swindell. Welcome, Tasha, and thank you again for being our guest.
Thank you so much for having me. Such a
Yeah, we
pleasure.
appreciate it.
Yes, and so before we get started, I'm just going to go a little bit into Tasha's bio. So Tasha Swindell is a devoted Christian, a committed wife, and mother of two exceptional young adults. A New York City native, Tasha earned a master's degree in public administration from the Metropolitan College of New York in 2016. She is a results-driven entrepreneur leader in the financial services sector, bringing 17 years of experience serving in the child welfare industry for the city and state of New York. Tasha is developing a thriving part-time business in financial services, having progressed to the position of division leader. Her mission is to equip individuals with the knowledge and tools necessary to augment their income, ensure proper protection, eliminate debt, and attain financial independence. Through scheduled Zoom appointments, she shares her experience and expertise in an engaging, interactive, and informative manner, consistently described by clients as enjoyable, detailed, personable, and enlightening. As a licensed life insurance agent in New York since 2021, Tasha is poised to expand her services in other states. Clients can expect guidance and valuable insights when consulting with Tasha. Her ultimate objective is to inspire individuals to achieve financial freedom. Tasha envisions establishing an empire of driven individuals who seek to overcome the limitations of a poverty mindset and shatter the cycle of generational poverty. Wow, that was a mouthful. Tasha, it's like you just do so much. There's not enough hours in a day for all what you do.
Right. Yeah. Yeah, she's a jack of all trades.
Yes,
I try. I have the people in mind.
yeah, that was a very impressive bio.
Thank
And so,
you.
thanks again to Tasha for joining us on our podcast. And I just want to start. I want to first ask you, what inspired you to become an insurance agent?
So, what inspired me is anything that I do. Like I just said, I have the people in mind. Too many of my loved ones passed away without life insurance, and once I came upon this opportunity, I said, "Oh yeah, this is what I want to do." Get education. A lot of people are not educated on the proper life insurance, the reasons they need life insurance. So many people are slack when it comes to securing a life insurance policy for themselves and their families. And I just want to get the word out there that it's vital. Too many times there are GoFundMe links
Right.
just flying around all over the place, and you're not going to get the needed value that you need in a GoFundMe link. You may get $50 here, $100 here, but that's not going to take care of your family. So that's something that inspired me to, get on this bandwagon and say, okay, let's get this going, people. Especially our people. The Bible says, "My people perish for lack of knowledge," and you gotta have sound knowledge today. And once you get that knowledge, you're now responsible for the knowledge that you have. So that's something that inspired me to start this
Oh, okay.
journey.
Okay.
That's
And
that's
Tasha,
good.
with so many uncertainties in the world today, one certainty is that we're all going to leave this earth one day.
Right.
So having life insurance sound like it's something that's very, very essential. Um, so besides
Absolutely.
life insurance, are there other types of insurance that you deal with, or just life insurance?
I just do life insurance. I
Life
do
insurance.
my expertise is term life insurance, and we'll get into that. Talk about the difference between whole life and term, but I'm more geared to term. I did have a whole life policy, and once I came into the knowledge of what I had and what I now have, I said, "Oh man, I gotta let the people know about this.
Yeah, that's
This
interesting.
is this is
That's
detrimental.
interesting
This
because
is
I normally hear the reverse.
yeah." Well, the reason why you normally hear is because our people are geared towards getting whole life. I know prior to me learning about this, my father was one. He was like, "No, don't mess with term. Get a whole life policy." And that's another thing. The employers are quick to
Mm-hmm.
give you a whole life policy. They'll come to your place of employment in droves, and then you got the lines out the door waiting to sign up for your policy. And that's I had gotten started with my policy like that at my job. But the reason being is because the whole life policies benefit the agents more
Mm-hmm.
than the clients,
Right.
because you're going to get paid as an agent. You get paid more money,
Mm-hmm.
whole life insurance agent, as opposed to term life. The money's okay, but we want to do what's right by the client. It's not just about our pockets. It's about what's doing what's right for the client.
Right.
Like,
And I want to piggyback on something you said, particularly with life insurance in our community, with the lack of knowledge, and, we being preyed upon by insurance companies and agents because they're aware that there's a lack of information in certain communities. A lot of time they got analytics and studies on these things and what demographics to target with specific things. And when you said something about, the GoFundMe era, and I see that a lot, like on social media. See people passing away, then immediately following that, you see a GoFundMe account,
yeah,
and it's like when a policy, a lot of people don't know for the price of uh, I don't know what people may, nowadays think's expensive, but they're not as expensive as people may think. You could get a policy sometimes $30, $40 a month, that you could set aside. People spend that on coffee in a month, in a few days, you know what I mean? Or other miscellaneous things, not taking into account that, you want to have something set up for yourself and your heirs. And just real quick, um, you have other communities that's in the know. Life insurance is used as the way of building wealth,
you
right,
got it.
for future generations, right? Because when you pass on and your heirs, get the money from your policy, then that could help start them on their journey to invest in or whatever it may be, education, things. So that's something we need to kind of hone in on as a community.
Absolutely. You hit it right on the head, because we're not educated. We're not educated on these aspects of what it is that we need life insurance for. I meet with many people on Zoom, and I love Zoom, and I love these platforms because I could be in my home, you could be wherever you are, and we could just talk, and provide education. So I had a prospective person on Zoom with me, and I was, talking to her about life insurance. "Oh no, I'm not getting no life insurance. I'm not leaving them kids nothing." I'm like, "Oh, okay, well, this is not the conversation for you." Okay. All right. So, and you really can't help anybody who have that mindset. If they dead set on saying no, what can you do? But my job is to provide the education. You can't say I didn't tell you.
Right.
You can't say I didn't tell you. But we use life insurance for a number of things. We call it the dime: death, income, mortgage, and education. And you
Mm.
can't get that through a
You
GoFundMe.
repeat that, Tasha? I like that.
Sure. The
I like
dime is
that acronym.
death, income, mortgage, and education. You know, when you start your life insurance policy, you should have at least 7 to 10. I'm sorry, hold on, I got my notes here. 7 to 10. I don't want to say it wrong. 7 to 10 times of your income. Okay. Basic life insurance, a basic funeral is like $7,000 to $10,000. Basic. That's basic. That's not no bells and whistles. That's basic, right? And then you should have enough to cover your income. 7 to 10 times. Your mortgage. If you just bought a house and you have your husband or your wife, and God forbid one of them passes away, that mortgage still has to be paid.
That's right.
That's not going to happen with the GoFundMe link. So you want to be able to get a policy that's going to substantiate at least your mortgage. So then, you don't have to worry about that debt. You have two things. You lost your loved one, and now you lost the breadwinner. And that life insurance policy covers that, so you're not in deep mourning, and then you're still suffering financially. And then education, these student loans, whew.
Right. Yeah, it's ridiculous.
Listen, that's a whole nother subject for another day. These student loans
right.
are something. So you want to be able to have your policy that will wipe that out. So, GoFundMe's today, it's just not, I mean, if you're doing a fundraiser, then okay, send me your link. But if you sending me a GoFundMe to bury your loved one, and you know what I do,
right.
I'm sorry, I'm not sending you money for your GoFundMe, because we should have had this conversation.
Tasha, it sounds like you're really big on education, right?
Yeah.
So I know you mentioned different types of insurance policy. You mentioned whole life, you mentioned term. So for our viewers who are not that well versed on the difference between the two, can you just kindly, explain the difference between the two and why someone should choose one over the other?
Absolutely. I'll give my example. When I was at my former employer, as I said, I signed up for a policy because they come to the job, and this was a whole life policy. When I signed up, I was paying, I don't remember how much I was paying, but it was a lot. It was coming out of my check every 2 weeks. And the first 3 to 5 years for a whole life policy, there's something called cash value. You should have something called cash value that's accumulating in your policy. But the first 3 to 5 years, you'll see a zero balance. If anyone has a life insurance policy, go and look at your life insurance policy. You'll see year 1, 0, year 2, 0, 0, 0. The first 3 to 5 years. Then either the 4th or the 6th year, you start seeing money start accumulating. Right. Now, you can't be dead and alive at the same time. Okay. You have a death benefit of your face amount, and then a life benefit of your cash value. Okay. In the event that you pass away, the company keeps the cash value. So you don't get that. However, when you're alive and you've accumulated enough down through the years, you can borrow against that cash value. I did not know that. I was like, when she told, well, let me not jump the gun. So I did not know that was money for me to use like a loan.
Right.
It was my money. I'm like, I'm accumulating this money and I want to take a loan out. And they told me I had to pay it back. I said, pay what back? I gotta do what? That's my money. What you mean? I gotta pay it back? Yeah, you have to pay that back. I'm like, but I don't want to. They said, okay, well, you don't have to. So they'll take it out of your face amount.
Right. Right.
It's good to be educated. It's good to be educated. So then, once I came into the knowledge of my company, where I am now, where I received my license, I opened up my term life insurance policy. Now, I love term. Term is just that. It's a set amount of years. Okay. I have, I believe, a 25-year policy for myself, my children, my husband, and it's not as expensive as opposed to the whole life policy. So what I was paying for my whole life, I'm paying for my term, and I have about 3 times more of my face amount. So you're going to get in your whole life policy, you may not have as much as you desire because it's so expensive.
Mm-hmm.
It's so expensive. As opposed to a term life policy, you can get a lot more for less. Now, for as far as your policy, would you rather give your agent or the company more money for less or less money for more?
Right. Less for more.
More.
Absolutely. Absolutely. And this is what when I give people quotes, because a quote takes 5 minutes. I can give someone a quote, and I go based on their age, if they have any health issues. Um, the younger you are, the more you can get. Most people, they wait until they like in their 60s,
Right.
you know, and they have diabetes or high blood pressure and all prescribe all this medication, and they like, oh, I need a policy. I'm like, oh,
Right. Now you looked at it as more risky at that point.
yeah. And then that 9 out of 10 times the underwriters are not going to approve you
Right.
because of your health issues.
Mm-hmm.
Of your health issues. And I tell people, regardless if you are going to take that medication, if they prescribe it to you, it is in your medical records.
Mm-hmm.
You can have them prescribe it and throw the prescription down the toilet. If it's prescribed to you, it's in your medical records, and that's what the underwriters are going to go based on. So as far as the two, the more beneficial one financially, to me, is term life, because you can get more for less money.
Okay.
And the benefit, do it while you're young. A lot of people who are young or single say, well, I don't need it. Well, you don't know what the future holds. You may find a significant other. You may find a husband or a wife. And then you have that policy while you're young. And then you add them to your policy, and at the end of the term, it's something called, you can renew it.
Mm-hmm.
Most people think that once the term is up, that's it, you lost your policy. No, you can renew it. It will increase a little.
Mm-hmm.
It will increase a little because you've gotten older, but you can renew it, and that's without a medical. So that's one of the benefits, a little bit of the benefits of a term life insurance as opposed to a whole life.
Okay, yeah, I was and that's valuable information. I'm sorry, Riz, that's valuable information, because I was always led to believe that's what took me to the hole. But I was always led to believe that as time went on, as the ages went on, as time went on, you will be paying more. It's not a fixed rate. You will pay more and pay more as time gets. So is that a benefit or is that a negative? I looked at it as a negative more so than a benefit. I'm not sure.
So it is fixed for that term. So like for let's say you have a 25-year term policy, that's fixed.
Okay.
And then once that term is up, you renew it. It's going to increase a little. It's going to increase. And then what you want to do, you want to know what the riders are. You want to know what the benefits of that term life insurance policy is, because every term is not the same. Every company is not the same. Some have terminal illness clauses where if you get a terminal illness, you can use 40 to 75% or 70% of that face amount for medical expenses if you get a terminal illness, a cancer, HIV, or something like that. Not everyone has that,
Right.
So you have to make sure you read your policy thoroughly to see what it entails.
Right. Now, I want to ask a question, right? Because I was speaking to a friend of mine, right? And, he's kind of informed about different investments and investment vehicles. And one thing he told me about was life insurance and how wealthy individuals and corporations actually also use life insurance, or the cash value aspect of it, as an investment vehicle where you could get an annual return on your money. So some people are taking money, they're not putting it in the bank hardly. They're using the life insurance policies somewhat like a bank, and they're getting annual 7-8% returns on their money, because the bank, you 0.1
0 point nothing.
I like that.
Right. So just wanted to know if you could, expand on that and how, these wealthy individuals are using that. And it is that good and what it entails. Because I know you have to put a lot of money. It's not really for the average person. Like it requires, and then you're able to leverage it where you can, like you mentioned, borrow against it. And then if you don't pay it back upon your passing, then they'll just retrieve it from your face value. So, have any information on that?
You're not gonna like my answer, and most people don't. I tend to stay away from anything. You do not use your life insurance policy as an investment. To me, that's a huge no-no. And there's something called the IULs. I think that's what you're referring
Right.
to.
Yeah,
The index universal life insurance policy. Most people are going bankrupt because of that. And again, like I said, those
What
type
is
of
that,
policies,
Tasha?
index universal life.
Okay.
IUL.
Okay.
The absolute worst. And I know a lot of people are exploring that and they're going bankrupt. They're taking money out of their 401ks, their retirements, and opening up this policy. And it's based on what the market is. If the market is high, you gain. If it's low, you lose. But I like to buy term and invest the difference instead of going into an IUL that is risky. It's highly risky. You never use a life insurance policy as an investment vehicle. Absolutely not, because it's just not wise. It's just not wise. So what I do, I'm in the process of getting my securities license as well. So really a financial coach. And I'm steering more people in the direction of investing. Leave the policy to the side. You have your policy. Don't mess with that. Don't mess with that. Start your investment. Start your investment. You can start your investments up to 12%. But as far as the IULs, I don't advise using that as an investment vehicle at all.
Okay, yeah, because I was speaking to a guy, like I say, he was giving me some literature on it as well, just opening my eyes to the idea of it and just the benefits and the risk, like you mentioned, is attached to the market. So it'll fluctuate up and down with the market. So that was good information, though. I appreciate it.
And the agents is another thing. The agents, they love it when you want that because the agents are the one who reap the real benefits. It's expensive. The agents are going to get paid crazy money, and then they'll leave you to the side and say, "Oh, hey, how you doing? Yeah, I lost my money, thanks." And then some of the agents, you can't reach them after you started. They don't answer calls.
Yeah. Once they get your money, that's it.
They got paid. That's right.
Right. Most insurance companies I deal with, like just vehicle insurance. These insurance companies, once they get my money, I can't pick up the phone for me no more.
Exactly.
So it's time to renew, and then they want to talk to me again. It's some kind of game they play, man. But like you said, once they got their money, they on to the next.
Exactly.
I guess
it's best to have a life insurance coach because a coach is going to steer you in the right direction to show you how to actually use your money to benefit you, and a coach is not going to just set you up with something and then, leave you. I like to call life insurance a set it and forget it. Okay. Most people, they look at life insurance and they say, oh, they have a stigma. Like they feel, oh, if I get life insurance, I'm going to die tomorrow. No. You said it and forget it.
Right.
And that's what a coach does. A coach sets you in the right direction financially and steers you in that right. You can call that coach, you can call that person, and if you want to increase it, you can increase it. If you feel you need to decrease it, you can decrease it. But that person is always accessible to you.
Okay. Now, you got a background in financial services, so I know what's important as far as debt is concerned, right? I know that's like, especially with the last few years and everything's so expensive. You have people are utilizing their credit cards now more so than ever just to make ends meet. So I'm going to ask you, like, what do you advise or recommend in terms of like debt elimination? Like, what strategies or approaches would you recommend for that?
So there's something called debt stacking that we use. If you have a lot of credit card debt, you're going to pay off the lowest balance. Once you pay that lowest balance, you're going to take that money that you paid off and attach it to the next balance, and or based on whatever that balance is. Let's say the lowest balance was $20. You're going to take that $20 and add it to the next one. Let's say the next one is 50. So you're going to pay that 50 plus that 20 because you already used that money anyway. And you're going to keep stacking that debt so that you can eliminate that debt faster. As opposed to paying the minimum, you're adding on that extra that you have paid from the previous card onto the next card, and you do that until you eliminate it all. Most people, they're trying to keep up with the Joneses. They got to get the Jordans. Everybody's still crazy about the Jordans. I got two teenagers. They not teenagers. I have two young adults. They're not crazy about Jordans. I don't know if everybody, still with the Jordans, but the Jordans, and they got to get the Gucci bags and this and that. Live in your own means.
And they're using credit to purchase it. They're not even buying it with disposable income.
Exactly.
They're buying it on credit, like you said, just to impress people, which is
exactly
mind-boggling, especially in today's day and age with all of the knowledge and information and consciousness that we should have, but yeah.
Absolutely. And with jobs, being risky, with this new administration we have, I'll leave it at that. Things are so risky today financially, and we want to make sure that we have our ducks in a row, and not trying to stay on top of the status quo.
Right.
Valuable information. I'm sorry. Go ahead, Bridget.
Go ahead. No, go ahead.
No, well, I'm saying that information is valuable because the stigma seemed to be negative on the term life, and this is the first time really I'm hearing some broke down information as far as like getting rid of that stigma on term life, and getting rid of the negative thought patterns that people had. So it's valuable information. That's good.
Definitely.
Most people, they feel that because they think that after the term is over, that's it.
Mm-hmm.
They can't get another policy, but that's false. You can, because the older you get, they say, the older you get to say, that's when you will experience some health issues. And that's not for everybody. Some people, the older you get, the healthier you get. Some of the young people, got more issues health-wise than the older people. But at the end of that term, you just renew it. Like I said, every term policy is not the same, but the policies that I provide, once you get to the end of that term, you can renew it. It doesn't just end. You can say, okay, yeah, I want to renew my policy, and you don't have to have a medical. Some people, if they want to start a term life insurance policy at a particular age, we go up to age 70. I want to see 70. And there are some 70-year-olds that they want a policy and they already past the age, right, and they have health issues. Most time, 9 or 10, they're not going to get approved. So if you start at a particular age, younger, where you're healthier, and then you reach that term, you just renew it without a medical. You don't need that medical.
And like I mentioned too, it's like too often, like I speak to people just about, because I have a policy myself, but just, insurance or other things of value, right, to our lives. People don't want to commit the money, that premium monthly. So you tell them, like, listen, or some people think it's more expensive than it actually is. You know what I mean? But you tell them you could get something for $30, $40, $50 per month. But then you have some individuals that they'll complain about that. You know what I mean? I've had conversations where they don't have no problem. Like if I say, listen, let's go to a concert. Okay, let's do it. Right? It's $200 a ticket, no problem. But I say, listen, I like to they just cannot fathom committing these $40 to consistently, because they don't really recognize the value of it, or they just so just uninformed about, or just the idea of how they spend their money, their priorities.
Absolutely. Most people will insure their phone
Right.
than insuring their life
Right.
and leaving a legacy for their family. Like
Right.
that iPhone 16 is really that valuable that your family, you're gonna let your family just, fend for themselves after you gone.
Right. Now, I want to just ask, okay, what are the top 2 or 3 insurances that people, which should be mandatory? We spoke about life insurance. We need, I guess, what would you say the top 2 or 3 insurances that people could have? I would imagine you got life insurance, medical insurance, I'm sure, which is another thing. Like I mentioned, you talk to people, they have no health insurance. Well, because right now I'm down in Atlanta, right? And in Georgia, it's way different than New York.
Mm-hmm.
You come to Georgia, they ain't giving you nothing. Like these red states, they ain't giving you nothing. You know what I mean? I remember a friend of mine, he had Medicaid, right, in New York, right? So he tells me, yo, E, listen, go get Medicaid. I'm like, all right, I'm trying to get Medicaid. I went there, I stood on that line for like 3 hours, right?
Wow.
I got up there to the young lady. I said, I'm here to sign up for Medicaid. She looked at me like I had 2 heads. She was like, Medicaid? She like, this is like, I don't know where you from, but she heard my accent.
Uh-oh.
Well, like basically, we don't give them. That's not possible. She looked at me, I'm young and healthy. She like, listen, you can go on the open market and get your policy. And I'm like, wow, like in New York, it says, everyone got Medicaid and stuff. But when you come down to the South, they ain't got nothing for you. So, what are the top 2 or 3 that you would say insurances that a person should have?
Well, health insurance, absolutely.
Right.
Absolutely. You can't see a doctor today without health insurance.
Right.
My mother, she had to go see a doctor. My dad had brought her to one of the health facilities up here. And the first thing they asking you is, oh, what's your insurance? And she didn't have the insurance that was affiliated with them, and they would not see her.
Right.
They would not see her. And so that's major. That's major. Of course, life insurance is something that I value. I value because tomorrow's not promised. Tomorrow's not promised, and that's something that you need to have so that you can leave back for your family. You want to leave a legacy. You guys are building legacies. You want to build that legacy for your family. Absolutely. Yeah. You want to build that legacy for your family. And then, something that a lot of people don't talk about, pet insurance.
Oh, okay. Well, I never thought of that.
As well, yeah. Pet insurance is something that you should have. Now, another thing, you want to make sure your pet is healthy. Because if your pet's not healthy and you're trying to get pet insurance, they're not going to approve you.
Right.
It's expensive to bring a pet to the vet today. Oh my gosh.
Right. I can imagine. That's why I don't have one. I can't afford it. That's another monthly fee and insurance. I'll pass.
My dog, she broke her nail, the one on the side. $400.
What?
It's like, oh my gosh, I need some pet insurance for you.
Right.
So Tasha, for those individuals that are struggling, living paycheck to paycheck, they'll say that, oh, I can't afford life insurance. It's too costly. I don't even have enough money. I don't even make enough money right now to pay my regular bill. So how I'm going to add now another bill on top of what I have to pay right now. So what would you say to these individuals who feel that they don't make enough money, to even have life insurance?
I say you're doing yourself a disservice by not. Regardless, I like to go based on people's budgets. We do have the dime, we do have what is needed, but me personally, I like to go based on what that person can afford. If you have a budget and you have hair in your budget, if you have your nails in your budget, you gotta have the best fit in your budget. You're going to have to really evaluate what that budget looks like and put that policy as much that as you can afford.
Right. Got to
Into
prioritize.
your budget. Prioritize. Absolutely. Prioritize. Everybody wants to look nice, you know, got their hands and everything done. But you want, especially if you have a family, you have to prioritize. You have to prioritize because, so like I said, tomorrow's not promised. Tomorrow's not promised. So this is why I'm a coach. I'm going to sit with you one-on-one, and we're going to go through, we're going to tooth and nail, we're going to fine tune and see exactly where can we fit this into your budget. Because it's possible, it's doable, and it's necessary. It's necessary. So this is what I do.
I gotta tell
that as well too,
Go ahead.
because you're doing yourself more of a disservice by not having it. So God forbid you have a family, you know, a husband and wife with 3 kids, and if you don't have life insurance, and God forbid if you die suddenly, you know, you're leaving that family there. If they have a mortgage, you know, you're leaving your wife there, you know, with a mortgage.
Absolutely.
Where you had 2 incomes coming in. Now it's only one because now you done passed away. And then now she has to rear these kids all by herself. So you put them in a worse situation than what, you know, they would be in with you still being alive. So you doing more of a disservice by not having it, because God forbid, if you pass away, things are going to just be so much worse for your family.
Absolutely, 100%.
So
you know,
do you advise because so
I'm sorry.
No. I wanted to ask you this question. Do you advise, since now we're in the age of financial literacy, especially for our people, do you advise, I know you said at a young age they should get into the life insurance. Do you advise that every family or individual should have a financial coach? Because I'm gonna tell you, there was a point in time where I know what's coming in, right? Me and my wife, I know what's coming in, and okay, we know that we could take care of this, but in my mind, I'm saying, how I keep being short? I don't know. I keep being short if I know I got more coming in than it's supposed to take care of everything, but I'm short. I just didn't understand the fiscal responsibility, because I guess I was under the impression that if you have more coming in than than the things that you have to handle, you have room to play. You know, you have room to do things. But so, do you advise that everyone is that something that we should do? Have a financial coach, or?
Yes, I advise that everybody should have a financial coach. You have to talk about your budget and your need. You have to intertwine the two, because sometimes we just really don't see it. But if we have that third party come in and, you know, can set things in order with you, not for you, because you're the one that you have to do the work. You know, I can show you the blueprint. This is what needs to be done. Then you have like more of an open eye, like, oh, I didn't really know I had this much over here. I didn't know I had, you know, so you have someone who steers you in the right direction financially, to show you that, yeah, it can be done. It can be done.
Okay. So I guess I'm gonna cut date night out. I'm going to tell them date night song. That was out. No, I'm just joking.
No, we're gonna work with that. We're gonna work with that. You're gonna keep that date night. You need that.
Not see you again, man.
Yeah.
No. That's vital.
So this has just been like an awesome episode. Some really vital information. Disclaimer, which I should have said at the beginning of the podcast, rather at the end, is that we're not financial. Well, Tasha's a financial coach, but we're not a CPA. We're not an accountant. We're not an attorney. We're just, providing this information for educational purposes.
Absolutely.
So definitely, if you want to, do something financially, reach out to someone like Tasha, who's a financial coach, who's certified in doing what she does. And then also too, Tasha, like if someone wanted to get in contact with you, right? Because it's like you're providing some vital services that's needed, especially if you're looking to, build a legacy for yourself and your family. How would someone be able to get in contact with you?
So I'll give my phone number for those who would like more information. My number is 315-664-8019, or you can email me at tsw tin96@gmail.com. That's tswin at 96 at gmail.com. Also on Facebook, my Facebook name is Saved T, SAVEDTEE, Swindell. Mostly on Facebook. And you can send me a direct message. And, I'm also, if you're interested in becoming a financial coach as well, you're interested in getting your license, I can definitely talk to you about that. I'm looking to grow a team of motivated individuals who are interested in carrying this out for you and yours, your family, your friends, your coworkers, learning this knowledge, looking to enroll people to get their licenses. So come on, join the team. The more the merrier.
Absolutely.
That's good.
Sounds good.
I mean, that's good. I got to tell you, Tasha, this has been one of the most informative and enjoyable episodes that we have.
Thank
And I
you.
know I speak for them when I tell you we are greatly appreciative for you for
Thank you.
You are, remember, that first guest. Sometimes, the first is the one that's going to spark the flame. And,
Actually, Bridget was the first.
Oh, yeah, Bridget. I'm sorry, Bridget. I apologize.
Come on, give my girl her credit.
Hey, I forgot she was the first until she took over the show, right? She was the first.
She went from guest to the boss.
I love it. That's my girl.
Yes. And we want to thank you, and we're very appreciative for you giving us your time. And thank you for being on Building Legacy. So remember to like, subscribe, and share, and also comment. And remember, it's Building Legacies. We have a play on the word BLDNG, Building Legacies. Like, subscribe, share, comment, and we're on all social platforms. And again, thank you very much for.
Yeah, it's been real.
Thank you for having me. I really appreciate it. God bless you all.
All right.
Thank you.